Question 1. An individual is considering applying for long-term disability insurance. In the policy, it specifies that the elimination period is 90 days. How does the elimination period affect the individual? The individual must wait 90 days before receiving benefits, and no benefits are paid during this waiting period. B. The individual will begin receiving benefits immediately after 90 days, but the first payment will cover the total benefit period. C. The elimination period means the individual will pay a higher premium during the waiting period. D. The individual will receive retroactive benefits for the 90-day waiting period if they become disabled. Answer A. Explanation. The elimination period is the waiting period between the start of the disability and when benefits are paid out. It is common in long-term disability insurance policies, and during this period, the insured individual does not receive any benefits. In the given scenario, after 90 days of disability, the individual would begin receiving benefits. It's important to understand that the elimination period doesn't involve paying higher premiums or retroactive payments. It is solely a waiting period before coverage begins. Question 2. Mr. Thompson works as a construction manager and has a disability income policy that covers 60% of his income. After an injury, he can no longer work for the next 6 months and has a monthly salary of $6,000. How much would Mr. Thompson receive in disability benefits per month? A. $3,600. B. $4,800. C. $5,000. D. $3,000. Answer A. Explanation. The benefit amount is based on the percentage of the individual's monthly income covered by the policy. In this case, the policy covers 60% of Mr. Thompson's income and his monthly salary is $6,000. To calculate the monthly disability benefit, $6,000 0.6 equals $3,600. Thus, Mr. Thompson would receive $3,600 per month as disability benefits. This calculation assumes there are no maximum benefit limits or other exclusions in the policy. Question 3 scenario. Ms. Garcia, a freelance graphic designer, has recently been diagnosed with a chronic illness that prevents her from working. She is considering purchasing a disability insurance policy to replace her income while she is unable to work. What key considerations should Ms. Garcia be aware of when selecting a policy for her specific situation? A. The policy should include coverage for pre-existing conditions to ensure she is fully covered. B. She should look for a policy with a long elimination period, as it will provide her with higher monthly benefits. C. As a freelancer, she should ensure the policy provides adequate coverage for self-employed individuals, as these policies may differ from those offered to employees. D. Ms. Garcia should choose a policy that only covers partial disability, as it will pay benefits if she is unable to perform only part of her job. Answer C. Explanation. As a freelance graphic designer, Ms. Garcia is considered self-employed, so she must ensure that the disability insurance policy is designed for self-employed individuals. Coverage for self-employed persons may differ from policies available to employees, especially regarding income verification and coverage limits, while pre-existing conditions and the length of the elimination period are important considerations. The most critical factor here is choosing a policy tailored to her self-employed status. A policy offering partial disability coverage may not be the best fit if it doesn't align with the type of work Ms. Garcia does as a freelancer. Question 4. A disability insurance policy has a benefit period of 5 years. After 4 years of receiving benefits, the policyholder's disability improves, but they are still unable to return to full-time work. What is most likely to happen to their benefits? A. The benefits will continue for the full 5 years, regardless of the improvement in the policyholder's condition. B. The policyholder will be required to return to work, or their benefits will be reduced to a partial amount. C. The policyholder will receive full benefits for the remaining year, as the policy is not contingent on the level of disability. D. The benefits will end after 4 years unless the disability is classified as total disability. Answer B. Explanation. Disability insurance policies often have provisions for partial disability. If the policyholder improves but is still unable to return to full-time work, their benefits may be reduced to a partial amount, as they are no longer considered totally disabled but may still qualify for partial benefits. The exact rules depend on the specific policy provisions, but typically as long as some disability remains, a reduced benefit might continue until the benefit period expires or the individual returns to work. Question 5. In New Hampshire, which of the following best describes the role of the New Hampshire Insurance Department (NHID) in regulating disability insurance? A. NHID sets the minimum premiums for all disability insurance policies sold in the state. B. NHID oversees the approval and regulation of disability insurance policies to ensure compliance with state law. C. NHID provides funding for disability insurance benefits for residents who cannot afford premiums. D. NHID monitors claims processes and directly handles claim disputes between insurers and policyholders. Answer B. Explanation. The New Hampshire Insurance Department (NHID) is responsible for overseeing and regulating insurance companies operating in the state, including disability insurance policies. This involves ensuring that the policies comply with state laws, protecting consumers, and ensuring that insurance products meet regulatory standards. However, NHID does not set premiums or directly fund benefits. Its primary role is to regulate the market and ensure fairness in policy provisions and claims handling. Question 6. Unless White is reviewing a disability insurance policy that includes a waiver of premium rider. How does this rider benefit her? It allows her to skip premium payments during periods of disability, but she continues to receive full benefits. B. It ensures that her premiums will be refunded if her disability lasts longer than 12 months. C. It guarantees that she will receive a higher benefit amount if she becomes disabled. D. It waives her premium payments for the first 6 months of her disability. Answer A. Explanation. A waiver of premium rider ensures that if the policyholder becomes disabled and is unable to work, they are not required to pay premiums during the period of disability. This helps the policyholder maintain their coverage without financial strain while disabled. It does not refund premiums or increase benefits, but allows for continued coverage without the premium cost during the disability period. Question 7 scenario. Mr. Carter is a software engineer with an individual disability insurance policy. He becomes disabled after an accident and is unable to work for 6 months. His policy covers 50% of his income, but he also qualifies for Social Security Disability Insurance (SSDI). What should Mr. Carter expect regarding how his disability insurance interacts with his SSDI? A. His disability insurance will be reduced dollar for dollar by the amount of SSDI he receives. B. His SSDI benefits will be deducted from his disability insurance benefits, but he will not lose any income. C. His disability insurance will remain the same, and he will receive both SSDI and private disability benefits in full. D. His disability insurance will increase to cover the full amount of his income, in addition to SSDI. Answer A. Explanation. Many private disability insurance policies include a coordination of benefits provision, which ensures that the total benefits from both private insurance and government sources like SSDI do not exceed a certain threshold. Typically, this means that the private disability insurance will be reduced by the amount received from SSDI. In this case, Mr. Carter's insurance is likely to reduce his benefits dollar for dollar by the SSDI amount to avoid overcompensating him for his loss of income. Question 8. When underwriting a disability insurance policy, an insurer typically considers which of the following factors when determining the premium? A. The policyholder's occupation, health status, and age. B. Only the policyholder's age and income level. C. The policyholder's family medical history and the number of dependents. D. The policyholder's annual income, marital status, and whether they have other forms of insurance. Answer A. Explanation. Underwriting for disability insurance involves assessing the risk that the insurer is taking on by issuing the policy. Key factors that influence premium rates include the policyholder's occupation, since some jobs carry a higher risk of disability, health status because pre-existing health conditions can increase the likelihood of claims, and age. Older individuals may be more prone to disabilities. Family medical history or marital status, while important for other insurance types, is less relevant for determining premiums for disability insurance. Question 9. What is one primary advantage of disability insurance for business owners and key employees? A. It protects the business by providing income for the business owner or key employees if they are unable to work due to disability. B. It guarantees the continuation of business operations in the event of a disability with no need for additional workers. C. It increases the business's overall profit margin by providing additional tax benefits for the owner. D. It offers compensation to employees who do not work due to their own personal injuries unrelated to their job. Answer A. Explanation. Disability insurance for business owners and key employees is typically used to protect the business's income and provide financial support in the event that a key person becomes disabled. It helps ensure that the business can continue to operate while the disabled individual is unable to contribute. This type of insurance often applies to situations where the absence of the business owner or key employee could severely disrupt business operations. Question 10. A disability insurance policy includes an exclusion for self-inflicted injuries. How would this exclusion affect a claim? A. The policyholder will not receive benefits if their injury is deemed to be self-inflicted, regardless of the disability duration. B. The policyholder will only be denied benefits if the self-inflicted injury is considered a permanent disability. C. The policyholder can still receive benefits for self-inflicted injuries if the disability lasts longer than 6 months. D. The exclusion does not affect claims for self-inflicted injuries if they are accidental. Answer A. Explanation. Most disability insurance policies include an exclusion for self-inflicted injuries, meaning that if the injury is intentionally caused by the policyholder, they will not receive benefits. This exclusion is in place to prevent abuse of the system and is generally applicable regardless of the disability's duration. If an injury is deemed self-inflicted, the claim for disability benefits would typically be denied and the insured would not be compensated for the disability. Question 11. Which of the following statements best describes the purpose of a coordination of benefits clause in a disability insurance policy? A. It allows the insurer to deny benefits if the policyholder is also covered under another disability policy. B. It ensures that the policyholder receives only the maximum amount of benefits allowed, reducing overcompensation. C. It automatically increases the disability benefit payout if the policyholder has multiple policies. D. It mandates that the policyholder must seek benefits from all available sources before claiming from the disability policy. Answer B. Explanation. A coordination of benefits clause is designed to prevent overcompensation by ensuring that the policyholder does not receive more than 100% of their pre-disability income from all disability sources combined. If the policyholder is covered under multiple disability policies, this clause adjusts the benefit amounts so that the total does not exceed a specific threshold, typically their pre-disability income. Question 12. In the context of a disability insurance policy, a waiting period refers to the time the policyholder must wait after filing a claim before receiving the first benefit payment. B. The period before the policyholder can cancel their disability policy for a full refund. C. The amount of time the policyholder must wait after becoming disabled before they can apply for benefits. D. The duration of time the insurer has to decide whether or not to approve the disability claim. Answer A. Explanation. The waiting period, also called an elimination period, is the time between the onset of the disability and when the policyholder starts receiving benefits. It can range from several days to months depending on the policy. This is essentially the deductible period the policyholder must endure before the insurer starts to pay out benefits. Question 13 scenario. Mr. Collins has a disability insurance policy that pays 60% of his income if he becomes disabled. He earns $5,000 per month. He becomes disabled and receives a payment of $2,500 per month. Mr. Collins is also eligible for Social Security Disability Insurance (SSDI), which pays him $1,500 per month. How will the disability insurance benefit be adjusted? A. The policy's benefit will remain at $2,500 per month, regardless of SSDI payments. B. The disability insurance benefit will be reduced by $1,500, leaving Mr. Collins with $1,000 per month from his insurance. C. The total amount Mr. Collins receives will be capped at 60% of his pre-disability income, so the insurance benefit will increase to $3,500 per month. D. The insurance benefit will be reduced dollar for dollar by the SSDI amount, leaving Mr. Collins with no disability insurance benefit. Answer B. Explanation. In many cases, disability insurance policies include a coordination of benefits clause, which reduces the private disability benefit by the amount the policyholder receives from other sources, such as SSDI. Since Mr. Collins' insurance provides 60% of his income, $3,000, and he receives $1,500 from SSDI, his insurance will pay $2,500 minus the $1,500 from SSDI, resulting in a reduced benefit of $1,000. Question 14 was a return to work provision in a disability insurance policy. It provides financial assistance to help the policyholder return to work by offering training programs. B, it guarantees the policyholder will be employed full-time once they recover from a disability. C, it allows the policyholder to receive partial benefits while working reduced hours during their recovery. D, it waives the premium payments if the policyholder successfully returns to work. Answer: C. Explanation. A return to work provision allows a policyholder to gradually return to work after a disability while still receiving partial disability benefits. If the person returns to work part-time or earns less than their pre-disability income, they can receive partial benefits to help cover the income gap as they transition back to full-time employment. Question 15. Which of the following would most likely be excluded from a disability insurance policy? A. Injury from a car accident. B. Illness due to a pre-existing medical condition. C. Disability resulting from a workplace injury. D. Disability from an unexpected illness, such as pneumonia. Answer: B. Explanation. Most disability insurance policies exclude coverage for disabilities caused by pre-existing medical conditions. This means that if a policyholder had a medical condition before obtaining the disability insurance, any disability caused by that condition might not be covered. Injuries from accidents and illnesses that are not pre-existing are generally covered. Question 16 scenario. MS. Alan has purchased a disability insurance policy that includes a cost of living adjustment COLA rider. After receiving benefits for 5 years, inflation causes her living expenses to rise. How will the COLA rider affect her benefits? A. Her benefits will automatically increase by a fixed percentage regardless of inflation. B. Her benefits will remain the same as the COLA rider only applies to the initial benefit amount. C. Her benefits will increase each year based on inflation up to a specific cap. D. Her benefits will not be affected unless the policyholder files a request for an increase. Answer: C. Explanation. A cost of living adjustment COLA rider increases the disability benefits over time to help keep up with inflation. The increase is typically based on a percentage tied to an inflation index, but there may be a cap on how much the benefits can increase. This ensures that the purchasing power of the disability benefits doesn't erode over time. Question 17. If a policyholder chooses a non-cancelable disability insurance policy, what does that imply? A. The policyholder can cancel the policy at any time, but the insurer cannot. B. The insurer cannot cancel or change the terms of the policy, and the premium will not increase. C. The insurer can cancel the policy only after the first year. D. The policyholder must renew the policy annually, but the insurer can refuse to renew it. Answer: B. Explanation. A non-cancelable disability insurance policy guarantees that the insurer cannot cancel the policy or increase the premiums as long as the policyholder continues to pay the premiums. This provides long-term security for the policyholder as the terms and premiums will remain fixed even if the policyholder's health changes. Question 18. Which of the following would most likely be covered under a disability insurance policy's own occupation definition? A surgeon who becomes unable to perform surgery but can still work in an administrative role in a medical office. B. A teacher who becomes unable to perform any kind of work due to a severe disability. C. A factory worker who is unable to perform any kind of work due to injury. D. A pilot who can no longer fly due to a disability but is still able to work in an office role. Answer A. Explanation. A known occupation definition of disability insurance covers the policyholder if they are unable to perform their specific job, their own occupation, even if they can still work in a different capacity. In this example, the surgeon could receive benefits because they cannot perform surgery even if they are able to work in a less physically demanding role. Question 19. Which of the following best describes a group disability insurance policy? A. A policy purchased by an individual that covers their disability regardless of occupation. B. A policy provided by an employer to all eligible employees offering group coverage at a reduced rate. C. A disability insurance policy that only covers accidents, not illnesses. D. A policy purchased by a family to cover all members in case of disability. Answer: B. Explanation. A group disability insurance policy is typically offered by an employer to a group of employees. Group policies generally provide coverage at a lower cost per person because the risk is spread across a large number of policyholders. These policies often provide a lower benefit level than individual policies, but are easier to obtain and less expensive. Question 20 scenario. Mr. Thomas is reviewing a disability insurance policy with a 24-month benefit period for mental health-related disabilities. He becomes disabled due to depression and anxiety after 18 months. What can Mr. Thomas expect regarding the duration of his benefits? That his benefits will continue for the full 24 months, regardless of the severity of his condition. B. His benefits will cease after 18 months, as that is the maximum duration for mental health related claims. C. His benefits will end after 12 months, as the policy does not cover long-term mental health disabilities. D. His benefits will continue until he can return to work, even if it exceeds 24 months. Answer. B. Explanation. Some disability insurance policies have a limited benefit period for mental health related disabilities, often capping it at 24 months. Since Mr. Thomas has already received benefits for 18 months, his benefits would typically cease at the end of the 24-month period, regardless of the ongoing severity of his condition. Question 21. Which of the following is the primary difference between a short-term disability insurance policy and a long-term disability insurance policy? A short-term disability pays benefits for a longer period than long-term disability. B. Short-term disability generally covers a higher percentage of pre-disability income than long-term disability. C. Long-term disability provides benefits for a longer duration, typically until retirement age. D. Short-term disability policies do not have a waiting period, while long-term disability policies do. Answer. C. Explanation. Short-term disability typically covers a shorter period, such as 3 to 6 months, while long-term disability provides benefits for an extended period, often until the policyholder reaches retirement age. Long-term disability also typically has a longer waiting period before benefits begin. Question 22. What does an additional monthly benefit rider in a disability insurance policy typically provide? A one-time lump sum payment in the event of disability. B. An additional income source if the policyholder becomes permanently disabled. C. A temporary increase in benefits during the first few months of disability. D. A monthly increase in the benefits paid to the policyholder regardless of the severity of the disability. Answer. C. Explanation. An additional monthly benefit rider typically provides a temporary increase in benefits for the first few months of disability. This rider is designed to help the policyholder during the initial period when they might face higher expenses or financial strain before the regular benefits start. Question 23 scenario. Sarah is unable to work due to a back injury and has a disability insurance policy with a 90-day waiting period. She is eligible to receive $2,500 per month after the waiting period. However, Sarah is able to work part-time during her recovery, earning $1,000 per month. How will her disability insurance benefits be affected? A. Sarah will receive the full $2,500 per month from her disability policy. B. Sarah will receive $1,500 per month, reducing her total benefit to account for her part-time income. C. Sarah will receive no disability benefits until she returns to full-time work. D. Sarah will receive $2,500 in addition to her $1,000 in part-time income. Answer. B. Explanation. Most disability insurance policies reduce the benefit amount if the policyholder is earning income while recovering. In this case, Sarah's policy will likely reduce her benefit by the amount of her part-time income, so she would receive $1,500 per month in disability benefits to make up the difference. Question 24. Which of the following is NOT typically covered under a disability insurance policy? A. Injury caused by a car accident. B. Disability resulting from a heart attack. C. Disability caused by a pre-existing condition. D. Temporary disability due to a broken leg. Answer. C. Explanation. Most disability insurance policies exclude coverage for disabilities caused by pre-existing conditions unless the policyholder has had the condition under control for a certain period before the policy's effective date. Conditions like heart attacks, injuries, and temporary disabilities like broken legs are generally covered if they occur after the policy starts. Question 25. What is the moral hazard associated with disability insurance? A. The risk that a policyholder might misrepresent their health condition to obtain coverage. B. The risk that the policyholder will become more likely to engage in risky behavior once they are insured. C. The risk that the insurer will fail to pay claims due to financial insolvency. D. The risk that policyholders will not purchase enough coverage to meet their financial needs. Answer B. Explanation. The moral hazard refers to the situation where the existence of insurance makes individuals more likely to take on greater risks because they are shielded from the full financial consequences. In the case of disability insurance, a moral hazard would occur if someone were to engage in more dangerous activities or neglect their health, knowing they would be financially covered in the event of a disability. Question 26. Scenario. John has a disability insurance policy that pays 50% of his pre-disability income with a monthly maximum benefit of $5,000. John earns $10,000 per month before becoming disabled. After becoming disabled, John receives $3,500 per month from his disability insurance policy. John then receives a $2,000 per month payment from a workers' compensation claim. How will his disability insurance benefits be adjusted? A. John will continue to receive $3,500 from his disability insurance as workers' compensation is not factored in. B. John will receive a reduced benefit, so his total income from both sources does not exceed $5,000. C. John will receive a reduced disability benefit of $1,500 to account for the workers' compensation payments. D. John's disability benefit will be reduced to zero since workers' compensation fully covers his disability. Answer B. Explanation. Many disability insurance policies have a coordination of benefits clause, which reduces the total benefit if the policyholder is receiving other income such as workers' compensation. Since John is receiving $2,000 from workers' compensation, his disability benefit is likely reduced to ensure that his total income does not exceed the policy's maximum or pre-disability income. Question 27. What is typically the maximum benefit payout duration under a short-term disability insurance policy? A. 3 to 6 months. B. 1 year. C. 5 years. D. Until the policyholder reaches retirement age. Answer A. Explanation. Short-term disability policies generally provide benefits for a limited time, often 3 to 6 months. The duration can vary by policy, but it is typically shorter than long-term disability policies, which can pay out for years or until retirement age. Question 20. Which of the following statements is true regarding a disability insurance policy's waiver of premium provision? A. The policyholder must continue paying premiums even if they are disabled. B. The insurer will waive the premium payments during the disability period, allowing the policy to stay in force. C. The waiver of premium only applies if the policyholder is disabled for a period of more than 12 months. D. The waiver of premium provision is optional and must be purchased separately. Answer B. Explanation. A waiver of premium provision allows the policyholder to stop paying premiums while they are disabled, and the insurance coverage will remain in effect. This provision typically kicks in after a waiting period, allowing the policyholder to focus on recovery without worrying about premium payments. Question 29. What is typically the main advantage of purchasing an individual disability insurance policy compared to a group disability policy? A. Individual policies generally provide better coverage for pre-existing conditions. B. Individual policies offer higher monthly benefit amounts. C. Individual policies are generally less expensive than group policies. D. Individual policies are portable and can be kept after changing jobs. Answer D. Explanation. One of the main advantages of an individual disability insurance policy is that it is portable, meaning the policyholder can keep the coverage even if they change jobs. Group disability policies are usually tied to the employer and may end if the policyholder leaves the company. Question 30. Which of the following best describes the term residual disability, e.k. disability insurance policy? A. A partial disability that results in an inability to work at all. B. A partial disability where the policyholder can work but at reduced capacity, leading to a loss of income. C. A complete disability where the policyholder cannot work in any capacity. D. A temporary disability that is expected to last for less than 3 months. Answer B. Explanation. Residual disability refers to a situation where the policyholder can still work but at a reduced capacity due to the disability, resulting in a loss of income. The policy typically provides benefits to cover the loss of income due to the reduced ability to work.